1,000 for the first time since November. So where do we go from here? Well, we're asking respected Wall Street veteran Laszlo Birinyi, president and founder of Birinyi Associates. Laszlo, good to have you back on Bloomberg. Let's talk about the S&P above 1,000 for the first time since November. A bullish sign in your view? I know you've been bullish, though, for some time.
Well, not really. Somebody wants to compare these levels as driving cross country with the kids. And every time you cross the state line, it's very exciting for about 5 minutes, and then you look for the next McDonald's. So I think it's all good and fine, but I really don't think it has any long-term significance.
Other things, though, that do have long-term significance when you look at these markets here?
Yeah, I think the fact that you have stocks like U.S. Steel, which is up 5%, and you have a stock like FSX, which is up 4 points. That tells you there's an economy that is probably doing a lot better than most of us give us credit for. And I think that's going to be the big surprise of the last half of this year is the economy more in the market.
Well, and also, though, let me just talk about some of the levels. I mean, the bounce that we've seen in the S&P, Laszlo. We're up about 50% from that intraday low back on March 6th. I mean, what does that say to you, though, about kind of the strength of the rally and the direction of the market?
It tells me that there's more to come, as there has been all along. And I also think that if you look at the issue of breadth, the fact that you have such nice breadth tells me a lot of people have not participated, and they're looking for laggards. They're looking for ways to get on board, and that also makes things look good for the future.
Do you feel like, that there's an awful lot of cash sitting on the sidelines, and once people are more convinced that this is it, that we're going to see, you mentioned higher, but how much higher?
I don't think there's any question about we're going higher. I think the people sitting on the sidelines are hoping the market comes down. I think they're probably going to be slow to buy at these levels. They're going to try to talk the market down. If you look at the metrics that we use and the historical parameters of the market, our metric for the S&P right now equates to about 1050. Now, that's not really a year-end target. It's just saying in this run, at this point, given its strength, we think the market could go to 1050. And then when we get there, we will reassess and review and see where we stand then.
Let me ask you, though, Laszlo, because you have people like the Treasury Secretary, Timothy Geithner, over the weekend. He said it's not clear yet how strong growth will be. I mean, if it's anemic, as some expect, I mean, won't that be a tough environment for stocks?
If it is, and I just wonder if the market's not saying it ain't going to be. I think the market may not be in accord with that view, and it could also be that the market's saying okay, but beyond that, things look well. The important thing about the market, I think, going out is not what is, it's what is expected. So if the market has figured out that GDP is going to be limited or 2% or whatever, that's the key. As long as it's within the parameters of the market's expectations, the market will be fine.
It's interesting you talk about market expectations. Our Michael Whitney talked about commodities, because we're definitely seeing commodities moving up today. If you look at some of the futures trading, going out several months here, they're expecting a lot higher prices. You buy that, and is the commodities area a play for you?
Well, I don't play commodities, but my basic maxim has always been don't fight the market. And if the market's telling me good news about commodities, who am I to argue against it?
Right. But what about the equity side of commodities, whether it's the miners or so on and so forth? Are you playing it at all that way?
Well, we play energy more than anything else, and we've done a little bit in the gold stocks. But the problem with the commodity stocks is you've got to really understand the commodity, and I'm not sure that I'm as comfortable in that area as I'm in some others. We have traded U.S. Steel very successfully, but again, I don't want to say that it's a commodity play per se. These are individual stocks where you have a high comfort level and feel that we can service and do good for our clients by being active therein.
Is it time to back off the defensive play completely, in your view?
I haven't really bought the defensive play, although I will admit that Coca-Cola's gone to 50 and that the Pepsi's done well. But again, these are vehicles to get in the market for people who have missed the train. And I would just assume look for the growth in the areas where there are earnings, the areas where you have potential to do better than the market.
Right.
And I don't think that you're going to outperform the market with Procter & Gamble.
You mentioned, energy. You mentioned steel. What other areas of the market you like right now?
Well, we like some of the growth stocks. We continue to own some of the tech stocks. The financials, selected financials, are the names that we like a great deal. Goldman Sachs particularly. And we're looking more and more in foreign stocks, which, despite their moves, still have some opportunities in our view.
Just got about 20 seconds here. John Dorfman, we just talked with him, and he mentioned the technology is kind of an interesting place, kind of backing off some of it or suggesting investors do. What do you think about the technology area, just quickly?
I think there's still potential there.
You do? Okay. Got a favorite pick there?
Well, I guess Google, and secondly, it's not considered a technology stock, but the MasterCard's done very well.
Okay, good to know. Hey, Laszlo, thank you so much. You take care.
My pleasure.
Laszlo Birinyi at Birinyi Associates.